tuned into Quick Charge, the high voltage podcast bringing you the top stories in electric vehicles and sustainable energy daily. And it's all powered by Electrek. Welcome to Quick Charge. It's April 10th, 2025, and I'm your host, Joe Boris. It has been a genuinely weird week, not only for the automotive world, but for Tesla as well, with promised tariffs coming, going away, now coming and delayed again. It has been absolutely disastrous. And I'm not saying that, Elon and Trump are here to destabilize America's economy, but if that was their goal, this would be a really good way to do it. And today we're going to talk about not necessarily the economy in general, but Tesla in particular, and some of the trouble that the company has been having over recent weeks and is going to continue to keep having, I think, for the foreseeable future. We're going to start right away with Tesla losing its top financial controller. Tesla's director of accounting controllership, Harsh Rugta, has left the company and joined eVTOL aircraft manufacturer Archer Aviation. Rugta has been at Tesla for more than 6 years. Tesla also lost another top talent earlier in the week, its longtime head of software. That's David Lau. He's reportedly told coworkers that he is exiting the automaker. So those are two very high-end, high-profile people who are leaving the company right before its Q1's earnings call, and frankly, having a pretty bad Q1 that missed all of the Wall Street expectations in terms of deliveries and even going below what they were calling the worst case scenario. So doesn't seem like things are good over there. People seem to be jumping ship, but they've got other problems too. And these are really demand problems. Tesla already has its new Model Y inventory available today. And Fred is interpreting that to say that demand is terrible. Tesla's new Model Y inventory available today in the US, just days after opening orders for what was supposed to be its most popular model. Fred is calling this out, saying that it proves demand is terrible and Tesla is trying to hide it. That's despite the fact that Tesla has launched a new, cheaper Model Y in the US and Canada just 5 days prior. So not looking good. We are a long, long way from the company that had an 18 to 24 month waiting period when the Model Y was first released. People waited months and months and months for theirs, and a lot of times paying even over sticker for people who were willing to flip these cars. So not looking good there. And it gets even worse for Tesla as you start looking at some of the programs that they've been working on. So this is a shady $43 million incentive grab. They're saying that this was just a misunderstanding. We covered this a couple of weeks ago. Tesla Canada reportedly delivered like 4,000 vehicles over the course of one weekend and filed for incentives totaling $43 million. And a lot of people saying that with only 2 locations, it was physically impossible to deliver that many cars. And I think I wasn't the one who said it or wrote it, but I certainly agree with that statement. This was back in March and was reported on by the Toronto Star. Something suspicious had happened with Tesla as it had filed for 8,653 EV sales within the last 72 hours of the Canadian rebate incentive. One Tesla location in particular in Quebec City claimed 4,000 rebates over the course of a weekend, which is physically impossible for a location of that size and represents a 20x spike in daily deliveries. Another location, Etobicoke, maybe, I don't know, claimed 2,500 rebates over the weekend, more than all the rebates that location had previously claimed combined. The alarm was raised by the Canadian Auto Dealer Association, which said its dealers as a whole had been left out of about $10 million in rebates, representing 2,200 cars. Dealerships claimed that Tesla gamed the system and that they cleared everyone else out. As a result of this, on March 25, Tesla had $43 million in rebates frozen as the government investigated what went on with the sudden spike in filings. Fast forward to now, and Tesla Canada has responded to the back and forth, claiming it didn't do anything weird, simply filed a number of backlogged applications, as is normal for the program. In a letter dated February 28th, obtained by Electrek, Brendan Zinedine, Tesla's director of sales and service for Canada, says that Tesla's filings were normal and that Transport Canada, the government office responsible for administrating the incentive program, should know better. Tesla claims that backlog filings have always been allowed and says that it was always complied with the program rules and has good standing with the Canadian government as a result. However, Tesla does not specifically state in the letter how many of its filings were for backdated sales. Tesla says it was shocked that it didn't hear about the incentive investigation directly from the government and instead had to learn about it through the media. Yay. That's us. We're the media. It suggests that it might pursue legal action if payments aren't resumed. though it does understand that it may not get payment for every delivery depending on program funding. Finally, Tesla plays the victim in the letter, saying that as a result of Transports Canada's investigations into these filings, Tesla employees have suffered negative public perception and are increasingly facing harassment and verbal abuse by Canadians. Yeah, I don't think that's what that's about, but hey, fair play. Tesla may not have a PR department, but they certainly have a lot of really masterful spin people who know how to put things together. So all of that is very interesting. Again, nothing real positive there if you're a Tesla fan. And even though March sales fell, Model 3 and Model Y prices on average crept up. So that's what you want when demand is waning. You want demand to go down while prices go up, and you can kind of blame one on the other rather than say, hey, people simply don't want to buy our cars anymore. Tesla's average transaction prices in March went up to 54,582. That's higher year over year by 3.5% and higher than they were in February, according to the latest new vehicle ATP report from Cox Automotive's Kelley Blue Book. Average transaction prices for the Model 3 and Y were higher month over month and year over year in March. Tesla sales in Q1 continued their long-term decline after peaking in Q1 of 2023. Estimates from Kelley Blue Book suggest Tesla sales in Q1 were lower year over year by more than 8%, and its deliveries were worse than expected. New EV prices in March overall and initially estimated by Kelley Blue Book at 59,205, higher year over year by 7%. The new EV prices increased from the revised higher February ATP of 57,015. But EVs are still seeing heftier incentives than the industry average. In March, the average EV incentive came out at 13% of transaction price, down 1% from February's revised 14.3%, but still well above what gas and diesel cars are getting. So where are we heading? Higher prices thanks to Trump's tariffs, but what will that look like remains to be seen. Aaron Keating, executive analyst at Cox Automotive, said, quote, all signs point to higher prices this summer as existing pre-tariff inventory is sold down to be eventually replaced by tariffed inventory. How high prices rise for customers is still very much to be determined, as each automaker will handle the price puzzle differently. Now, again, this is like a 2-day-old article, and it's already hopelessly out of date because we're not doing that anymore. We canceled all the tariffs in order to pump Trump stock prices. So wild, wild west, guys. Glad to be doing 2025 with you because it's just been bananas so far and going to get even weirder. And speaking of getting weird, Tesla is turning to some really weird, edgy social media marketing amid its brand's damage. Tesla's turned to using edgy and sort of provocative social media marketing and ads amid brand damage crisis caused by CEO Elon Musk. Companies like Wendy's, Ryanair, and others have popularized this marketing strategy by responding to social media content with funny replies that some might find offensive. Tesla's been giving it a try over the last few days, but it's falling flat as the sense of humor appears to be about the same level of CEOs, a stunted 14-year-old. And I would say a stunted 14-year-old who started watching HBO a little too early, but that might be too niche of a reference, you know? So here's one example that Fred highlighted on Twitter. Let's make Teslas better. What do you all want for 2026? Cybertruck responds, ass. I just want ass. Says, we didn't raise you without manners. What do we say when we want something? Apparently you're supposed to say please. Tesla's making fun of the fact that Cybertruck still doesn't have the actual smart summon feature, which Fred writes, some are calling ass. I mean, that's literally the acronym, and the acronym was chosen the way it was because the CEO of the company thinks those kind of things are funny. And I don't know. I don't agree with Elon on a lot of things, but I do think that's mildly funny. Speaking of not agreeing with Elon on a lot of things, Fred Lambert, our resident Tesla expert, wrote, cracks are forming in Elon Musk's armor of lies. This is going to be a very provocative article, but there's some really interesting stuff in there, emails, receipts, that kind of thing from OpenAI and its conversations with Tesla founder and CEO Elon Musk, obviously founder there in quotation marks. But it's really interesting to see how Elon frames this, how this kind of PR spin that he's given it corresponds with some of the actual factual things that we can look at as outsiders. And then finally, how OpenAI responds to that. Last year, Tesla investors sued Musk for breach of fiduciary duty and resource tunneling over the founding of xAI, a private AI company exclusively under his control. Musk had previously stated that Tesla would be a major player in AI and that AI products would be critical to Tesla's future. But in early 2024, the company threatened not to build AI products at Tesla if he didn't get more control over the company by getting more shares. He also redirected NVIDIA AI hardware acquired by Tesla to xAI and hired Tesla employees to work at xAI. In short, Tesla shareholders argue that Musk is in breach of his fiduciary duties to shareholders by creating a private company that competes directly with Tesla. The lawsuit also cites similar issues with Musk's acquisition of Twitter. This week, Musk and Tesla board members, who are also defendants in the lawsuit for not stopping Musk, have filed to try to dismiss the lawsuit via Bloomberg. Quote, the shareholder suit by a group of pension funds and other investors is long on hyperbole but woefully short on well-pled facts, the board members said in a court filing Monday. Yet they cannot escape the undeniable reality Tesla has thrived under this board and CEO, delivering astronomical returns to stockholders while advancing its mission to create sustainable abundance for all. It will likely take a while before the lawsuit moves through the courts, but in the meantime, Tesla shareholders have found a strong ally in OpenAI. OpenAI has been defending itself with the release of some emails that show Musk actually agreed for years that the organization needed to move to a for-profit model. Now, OpenAI has countersued Musk and released more details that show Musk has been misleading the public for years and also explains some of his moves from Tesla and xAI. Musk's AI efforts went from OpenAI to Tesla to xAI. All the documents released by OpenAI as part of their countersuit paint a much clearer picture of Musk's involvement with AI and how it evolved over the years. Fred is going to start here with a clear timeline to make things easier to understand. Throughout the 2010s, Musk had long been fascinated with AI and emerged as one of the most prominent tech voices warning about its dangers. In 2015, Musk co-founded OpenAI as a nonprofit to try to create a safe AGI. In 2017, Musk privately communicated to many people in OpenAI and the AI community that the company needed to switch to a for-profit model and raise billions to be successful due to the cost of AI hardware. In 2018, Musk attempted to gain control of OpenAI and merge it with Tesla, but this was rejected by OpenAI's board, which ultimately took investments from Microsoft to start a for-profit arm as it gave the organization more independence. Later that year, Musk left OpenAI, citing a conflict of interest with Tesla. From then to 2022, Musk positioned Tesla as the world's leader in AI, hiring a ton of AI talent and claiming Tesla will play an informed role in AGI. In 2022, Musk sold tons of billions of dollars with Tesla stocks, partly to buy an overpriced Twitter for $44 billion. In 2023, shortly after the launch of OpenAI's ChatGPT, Musk created a private company, xAI, to develop AI products and compete with OpenAI. In 2024, a judge rescinded Musk's $55 billion CEO compensation package, which would have increased his stake in Tesla back to where it was before he bought Twitter. Later that year, Musk threatened Tesla shareholders that he would not build AI products as Tesla unless he got more control in the form of more shares. Finally, Musk hired Tesla employees for xAI and redirected shipments of hardware and training compute from Tesla to xAI, and then sued OpenAI to try to block its transition into a capped for-profit business. OpenAI has all the receipts to prove this, and I recommend reading all the emails that are going to be linked to here and over at the show notes at electrek.co. Definitely go into the show notes here if you're on YouTube, or if you're listening to this on Spotify or Apple Podcasts, be sure to head over to electrek.co and search for that Quick Charge podcast so you can get all these receipts and look through them yourself in the source links. That's all I've got for today, April 10th. It is looking pretty sketchy for Tesla, but hey, fundamentals have never had anything to do with why this stock was valued what it's been at. So, hey, head on down to the comments. Let us know what you think. Let us know if you think it's underpriced, overpriced, and yeah, it's just bananas out there, guys. Like and subscribe so you don't miss the next one.